Good morning. I am Malik. If you are listening to this, take a deep breath. Check your pulse. Because after what happened yesterday evening, half the market is in shock, and the other half is still in denial. Welcome to Stock Sense. It is Tuesday, January 27th, 2026. Yesterday, I warned you. I told you Monday was a trap. I told you the $191,000 level was a lie. And what did we see? The KSE-100 touched 191,032 intraday. The euphoria was blinding. The rate cut party was in full swing. Everyone was buying. And then, the floor fell out. The index didn't just pull back, it reversed. We closed red at 188,587. We lost 579 points from the open, but from the high, we lost nearly 2,500 points in a single session. And then, the State Bank of Pakistan walked into the room and turned off the lights. This is the post-mortem of the pivot that never happened. We are going full beast mode today because the game just changed. The rules just changed. And if you are still holding the rate cut stocks, cements, steels, autos, you are standing on a landmine. The SBP rug pull. Let's not mince words. The State Bank of Pakistan, SBP, just rug pulled the entire Pakistan Stock Exchange. For weeks, the analysts, the so-called experts on TV, told you inflation is down to 5.6%. A rate cut is guaranteed. Buy cements, buy tech, lever up. Yesterday evening, the SBP Monetary Policy Committee, MPC, looked at the data and said, no. They held the policy rate at 10.5%. Do you understand what just happened? The market had priced in a 100 basis point cut. The market was trading as if money was about to get cheap. The SBP looked at the IMF, looked at the global oil prices and said, not yet. Why? Sticky core inflation and the energy crisis. They know what I have been telling you for months. The war trade is inflationary. You cannot cut rates when oil is trading at $115 and the Malacca blockade is choking off supply. The SBP knows that if they cut rates now, the rupee crashes. They chose to save the currency and sacrifice the stock market bulls. The result? Today, the hope trade dies. The reality trade begins. Let's dissect the crime scene from yesterday. The KSE-100 hit an all-time high of 191,032. Volume was massive, 870 million shares. But look at the close, 188,587. This is a textbook blow-off top followed by a rejection. The smart money used that morning spike to 191K to unload billions of rupees worth of stock into retail hands before the SBP announcement. If you bought Lucky Cement at 500 yesterday thinking a rate cut was coming, I am sorry. You are now a bag holder. To make matters worse, today is one of the busiest days for earnings. We have 13 board meetings scheduled for today, Tuesday, January 27th, and almost all of them are in the sectors that just got hurt by the SBP decision. Let's break down the kill zone. 1. The cement trap, Lucky Cement, LUCK. Meeting time, 4:30 p.m., after market. The situation, Luck closed yesterday at 488.26. It was betting on a rate cut to lower its finance costs and boost construction demand. That didn't happen. The danger, the result comes after the close. Do you hold a stock that needs lower rates through a day where the market is pricing in higher for longer? That is a gamble I am not willing to take. Expect pressure. 2. The steel crisis, International Steels, ISL. Meeting time, 10 a.m. The situation, ISL closed at 108.78. Watch this result in the first 30 minutes. The construction sector is dead in the water without cheap financing. If ISL posts a profit drop or a margin squeeze, it confirms the thesis, sell steels. 3. The auto shock, Honda Atlas Cars, HCAR. Meeting time, 12 p.m. The situation, HCAR closed at 260.74. Who buys a Honda Civic at 22% financing rates? Nobody. The auto sector is the most sensitive to interest rates. With the rate cut off the table, their sales forecast just got slashed. If they miss earnings today at noon, the stock could limit lockdown. 4. The Sasgar test, Sasgar Engineering. Meeting time, 12:15 a.m. The situation, this has been the darling stock, trading at 2,149. But even darlings need cheap money. High expectations meet high rates. Tread carefully. The survivors, where to hide. So, is everything bearish? No. Capital doesn't leave the market, it rotates. Where does it go? 1. The banks. MEBL, CMB, UBL. Here's the twist. High interest rates are bad for the economy, but they are great for banking net interest margins, NIMs. The banks were sold off on Friday and Monday because rates are falling. Now, rates are staying high. MEBL closed at 476.97. It broke support. But today, the SBP just handed them a gift. If MEBL reclaims 485-490 today, the narrative flips. Banks become the safety trade again. 2. The war trade, energy. The SBP decision confirms my thesis. Inflation is the threat. What causes inflation? High oil prices. Who benefits from high oil prices? Energy stocks. Atok Refinery, ATRL, closed at 878. OGDC closed at 327. PPL at 269. The SBP is scared of oil. You should own what the central bank is scared of. The fundamentals, the diesel shortage, the $115 Brent crude, are untouched by the interest rate. In fact, they are the reason for it. The battle plan for today. Here is your strategy for Tuesday, January 27th. 9:30 a.m., the panic flush. The market will gap down. The rate cut bettors will panic sell cements and tech. Do not sell your energy stocks in the first 15 minutes. Let the weak hands flush out. Do sell cements and steels on any dead cat bounce. The thesis is broken. 10 a.m., the ISL signal. Watch the international steels result. If it's bad, dump any construction-related stocks you have left. The vulture bid. We are buyers of the panic only in the war trade. ATRL. If it dips to 868.65, we buy. OGDC. If it tests 320.322, we buy. We are buying the inflation hedge while the market sells the inflation victims. The golden rule. Yesterday was euphoria. Today is consequences. The SBP just told you the party is over. Take the headphones off. Focus. Do not fight the central bank. I'm Malik. Helmets on. Good luck.